United Parcel Service stock, ticker symbol UPS. This stock is down 19% year to date, underperforming the S&P 500 big time. Today, UPS presented quarter results where they beat on EPS but missed on revenue. Next to that, they lowered their guidance. The stock went down minus 5%. And people love UPS stock because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yield at 4.4% and 13 years of dividend growth. So could this be the perfect moment to buy UPS stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UPS do? As the world's largest parcel delivery company, UPS manages a massive fleet of more than 500 planes and 100,000 vehicles, along with many hundreds of sorting facilities to deliver an average of about 25 million packages per day to residences and businesses across the globe. If we dive in the earnings report, we see that revenue was reported at 21 billion, down almost 13% year over year, which concerns me a lot. Profit margin went down 530 bps, which is a freaking amazing number. And maybe this concerns me even more. EPS was reported at $2.99, down 47% year over year. For the US domestic segment, we see an average daily volume decreasing with 11.5%, which is quite a lot. Revenue is down 11.1% in the US domestic segment, while revenue per piece is up a tiny bit versus last year, but it is coming down quarter over quarter. The operating margin fell down big time in the US, which again concerns me a lot. International daily volume is down 6.6%, which is also not looking that good. Revenue is also down 11% year over year, and also the margins are falling down big time. The third and last segment, supply chain solutions, is also down big time year over year in terms of revenue. In total, minus 21.4%. And again, margins are decreasing heavily. UPS is lowering the full year outlook with revenue in a range of 91 to 92 billion. An operating margin between 10.8 and 11.3%. To me, it is a good and a bad thing at the same time that they lowered their guidance. And now that we know a little bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. UPS is a 120 billion market cap company. PE ratio is at 12, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for UPS stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 96 billion, and in this graph we see that revenue went up in the long run, but it is coming down quite a bit recently. Margins are going up and down quite a bit, but in the long run it was increasing. However, in the earnings report we saw that margins were decreasing big time. EPS is following the same pattern as the margins and revenue. Nothing really special to add here. Analysis expect that in 2023 the EPS will decrease big time, and after 2023 it is expected to see double-digit growth numbers, which is kinda surprising to me. For the revenue it is a pretty similar story, but with lower numbers. It is also a bit surprising to me to see mid-single digit growth numbers in the coming years after recent events. Return on assets is sitting at 9.4%, which is a great number. Return on equity looks very good, and the most important number, return on invested capital, is sitting at 17.2%, which is a great number, but it's slightly lower versus the 5-year average. But to be honest, 17.2% is still a great number. Current ratio is at 1.32, which is looking pretty good. The number itself is pretty steady, which is something that I really like. Right now, UPS has 25 billion in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. UPS has roughly 7.8 billion in total cash, so they can't pay down a big chunk of their debt, but they are almost there. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. It is going up and down a bit, so I prefer a bit more steady in pattern here. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.4%, which is a great number. Annual payout is at $6.48 and payout ratio is at 55%. I prefer 50% or lower, so right now they have 45% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 12%, which is a great number, and they have 13 consecutive years of dividend increases. And if you take a look at these numbers, the dividends paid since 2012, you see that UPS did increase the dividends at low numbers for a long time. But last year they did massive increase in dividends. Payout ratio is a very important metric with the dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is increasing to 60%, so keep an eye on that number. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare UPS stock with the overall market, in this case the S&P 500. Next to that I added FedEx stock. On the 5-year chart we see that UPS underperformed the S&P 500 by a decent amount, and that is basically due to the past few months. FedEx is also beaten by the S&P 500. On the 1-year chart we see that the S&P 500 beats UPS stock as well, but FedEx had by far the biggest return with 54% in total, crushing both UPS and the S&P 500. On the 6-month chart it is looking pretty rough for UPS, with a minus 15% return, while both the S&P 500 and FedEx are having a significant better return again. On the 1-month chart it is again UPS that is having a negative return, but both the S&P 500 and FedEx are having a negative return as well. So bottom line, UPS stock was beaten by the S&P 500 in the long run, but also in the short run. So could this be the perfect time to buy UPS stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 1, 3 and 5% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 9, 10 and 11%, and for the free cash flow margin I'm putting in lower numbers. For the PE ratio I'm putting in 11, 12 and 13. And for the price to free cash flow I'm putting in slightly higher numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now UPS stock is at $139. I hit analyze and we see a lot of red numbers. We have a low price target of $66 to $92. We have a mid price target of $91 to $121. And we have a high price target of $125 to $159. To me, the mid to high price target is the most justified here, indicating that this stock is overvalued right now. I think this is the perfect example on why it is a good thing to keep analyzing stocks every month or quarter. You want to check if things are changing, and in the case of UPS, things are changing drastically. The whole company is under pressure with revenue that is falling down, but also margins are going down big time. Other than that, most fundamentals look really good, and the dividends also look really good. Right now the problem is growth and valuation. With the fourth quarter being a massive opportunity for UPS to make things right, I'm really looking forward to the next earnings report. For now I'm skipping this stock and keep analyzing them from time to time to see if things are changing. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.